What is the Howey Test? The U.S. Supreme Court case known as the Howey Test is used to determine whether a transaction meets the criteria for the designation of an investment contract, making it a security and subject to the disclosure and registration requirements of the Securities Act of 1933 and the Securities Exchange Act of 1934. If there is an investment of money in a common venture with a reasonable expectation of gains to be received from the efforts of others, according to the test, an investment contract is present. Any contract, scheme, or transaction must pass the test. In order to position blockchain and cryptocurrency initiatives with investors and project backers, the test is crucial. The test may reveal that some cryptocurrencies and initial coin offerings, ICOs, fit the criteria of investment contract. Understanding the Howey Test. The SEC versus W.J. Howey Company case, which reached the Supreme Court in 1946, is referred to as the Howey Test. The Florida buyers who purchased the Citrus Grove tracts from Howey Corporation would later lease the land back to Howey. On behalf of the owners, company employees would take care of the orchards and market the produce. Revenue was split between the two parties. The majority of buyers lacked agricultural knowledge and were not compelled to care for the land themselves. The Securities and Exchange Commission, SEC, of the United States intervened because Howey had neglected to register the transactions. The leaseback agreements were deemed to qualify as investment contracts in the court's final judgment. As a result, the Supreme Court set 4 standards for determining the existence of an investment contract. A contract for investment is 1. An investment of money 2. In a common enterprise 3. With the expectation of profit 4. To be derived from the efforts of others. In the Howey case, the purchasers of the Florida citrus plantations viewed the deals as lucrative solely because the labor and knowledge were supplied by others. In order to obtain an income stream, buyers merely needed to invest funds. According to what is now known as the Howey Test, this qualified the transaction as an investment contract, necessitating SEC registration. Howey Test in cryptocurrencies. Digital currencies like Bitcoin are infamously challenging to classify. Due to their decentralized nature, they frequently avoid regulation. The SEC has still expressed interest in digital assets and has worked to define when the sale of such assets constitutes an investment contract. If there is an expectation of profit to be received from the efforts of others, that determines whether a digital asset qualifies as an investment contract in the majority of circumstances. The development and upkeep of the digital network, for instance, may be handled by the project's sponsors rather than a dispersed community of independent users, in which case the purchasers of a digital asset may be reliant on the efforts of others. The need is also satisfied if the supporters of the project take actions to boost the value of the virtual asset, for as by reducing supply through token burning. If the project's supporters continue to take on a managerial role, that would also satisfy the efforts of others requirement. Special consideration. If the SEC determines a Bitcoin token is a security, a number of consequences are raised. In practice, this means that the SEC has the authority to decide whether a token may be offered to American investors and that the project is obligated to register with the SEC. The SEC's 2017 decision that the selling of DAO tokens in exchange for Ether violated federal securities law was a noteworthy use of the Howey Test. The SEC effectively fired a warning shot at the cryptocurrency industry by stating that securities rules apply to token sales rather than taking enforcement action. Summary: what meets the criteria for an investment contract, and is consequently covered by U.S. securities laws is determined by the Howey Test. If money is invested in a joint venture with a reasonable expectation of gains to be received from others' efforts, an investment contract exists. For positioning blockchain and cryptocurrency initiatives with investors and project backers, the Howey Test is crucial. The Howey Test may reveal that some cryptocurrencies and initial coin offerings, ICOs, fit the criteria of investment contract. Thanks for watching. Don't forget to subscribe.